Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's day is September 18th, the Fed rate decision day. Lots of uncertainty going on as a result of one, the rate decision, 25 or 50 basis points. Two, is it going to be more dovish 25 basis point cut, or a more dovish 50 basis point cut, or a more hawkish 50 basis point cut, or something in between? We also have things like the dot plot. We also have the essential tendencies, including unemployment, including inflation, including GDP. All that's going to cause some lots of uncertainty, and it's important to understand the roadmap from a technical perspective of the major currency pairs. I already did it in the first video today, where I took a look at the euro, the dollar versus yen, and sterling versus US dollar. I suggest you go back and look at that video. If you're trading the dollar versus Swiss, you want to pay attention to this video as well. So let's get started. I'll start by taking a look at the hourly chart. I'm going to be switching around, but I'm going to start by taking a look at the hourly chart. I'm going to spread it out a little bit. Then I'm going to look at the daily chart. So be aware, be prepared for my changing. What I can say about this hourly chart is, if I go back to, let's say, this day right through here, and put a little red box around here, apart from this break to the downside, this was off of the U.S. jobs report a couple weeks ago on Friday. We've seen lots of up and down price action in the dollar versus Swiss. Move to the downside and move to the upside and move to the downside. I'll move to the upside and move back to the downside. You can see the ups and downs sawtooth pattern in the price action for the dollar versus Swiss. Now, also within that up and down are these moving averages. There's three, as a matter of fact, right here, all become between the 0.8467 and 0.8471 level. The 100-hour moving average, the 200-hour moving average, the 100-bar moving average, and the 4-hour chart. All those are within this area right through here. So that's a key level, and it's a key barometer for traders in trading today. This week we've seen sellers against those, a combination of those moving averages. Yes, we moved above two of them here, but we held below the 100-hour moving average. And trading yesterday, we moved a little bit above those two again, and fell off in early trading today, away from those levels, and we are below those levels. So the bias is more to the downside here for the dollar versus Swiss going into the rate decision. I have this horizontal line going across here as well. This level, admittedly, has been broken out to the upside and the downside over time, but in trading here today, including trading here today and a little bit below the level yesterday, but we are reestablishing support. So this level is going to be a level of importance on the downside, and then we start to look toward this swing level right through here, where we had a number of different swing lows coming in play, sans this level right through here from the jobs report day. Put the red box in here again, so get below this area right through here, including getting below the 84 level, which is the low of this level right through here. It's a nice little round number, natural support level, and we start to open the door toward the low price from that unemployment jobs day. Now, to look at where this level, what this level means off of a longer term perspective, I have to look at the daily chart. If I go to the daily chart and take a look at our low price right here, it started to approach the low price from December of 2023, end of December 2023, but found early buyers against that low right through there. The low from December 2023 came in at 0.8331, and obviously, if we break below the low price from the employment day a few weeks ago, we would be targeting that 0.8331 level. If we get below that level, it opens the door for further downside. So that's a look lower for the dollar versus Swiss. What's a look higher? And again, I'm going to go back to the hourly chart to outline those levels. And I already talked about the moving averages right through here. So the price needs to get above those levels to increase the bullish bias, at least in the short term. And staying above that level would do that from a technical perspective. And then I'm going to take a longer-term look, and I'm going to focus on this trend line right here. This trend line was defined by a number of different swing highs right here, right here, right here, right here. All these came right up to the level and found willing sellers against that level. And trading last week, the price did move a little bit above it. And you can see the buyers tried to push higher, but they couldn't, and the market failed, ultimately reestablishing resistance and pushing to the downside, pushing below our moving average levels and away from on the lower side of the red box right through here. So that trend line right here is going to be another level that we need to get through. And then we start to look at things like the 38.2% retracement, the 200 bar moving average, and the 4-hour chart, which we haven't been below since all the way back here. That goes back to July, folks. So getting above that level would be important. Then we start to look toward the 50% retracement, this high right here, and the high of the red box right through here. All those levels come together at 0.85616. Get above that level, and we outside the red box, we look for higher levels in the dollar versus Swiss that would come off of a more hawkish or less dovish Federal Reserve. So be aware of that. So that's my detailed look at the dollar versus Swiss franc. Outlining the roadmap both to the upside and to the downside for this currency pair. It's the levels that you have to pay attention as a trader if you're going to trade. If we start to see breaks to the upside or downside through some of these levels, look for further momentum in the direction of the break and hope for the continued momentum in that direction. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.